Warriors. Let's have a great week. Hope everyone had a great weekend. Patrick, Glenn, how are you? All the stalwarts are in the room. Wanted to start off showing non-subscribers, active pattern in plays. I see a lot of green here, green, 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 green. So I'm not going to talk about those. I'm going to talk about a few things that aren't in the pattern of plays. Last week I brought it up with Steve. It's US dollar Swiss, the weekly, right on the verge of the 50-week. We had an inside week last week. I was teaching my Eagles, talking about looking for an outside week, which, you know, sometimes we plan, God laughs. But that would include taking out last week's high of 96.60. I think that was this high right here, 50. So maybe a move to 60 to 70 and then give that 50-day moving average a little tolerance. Perhaps we're setting up some type of rising wedge here. Steve will probably talk about it. And if not a big failure, why not at least a correction? Especially since we're seeing some dollar weakness. And speaking about the dollar, I don't see anything that's going to stop it from going to new lows. Okay, we attempted another bounce midweek. Under this low, it's pretty vulnerable. This was, I believe, Tuesday's low at 89.36. So that would take it down to, 88.25. Maybe we get an overthrow down here, 87.5 potentially. Everyone with me? You don't have to agree with me, but kind of see where my head's at on the dollar. Potential short in the Swiss. Dollar still looks negative to me. Again, you don't have to agree. I just want you to see what I'm seeing so you get the picture. Of course, everyone's eyes were focused on, there were no real good sports on TV Friday night. So the U.S. had their missile launch towards Syria. And again, this is something I was talking about over the weekend. And this could end up being one of Blake's favorites. Get a double top here. In fact, the week before, I was surprised this high never took out the stops here. It should have made me skeptical of this high. But where were everyone's stops in the crude? You think there was a couple of buy stops here after it didn't take out this high? At least one or two? Two people got stopped out of their short crude when it took that out? Well, if that was such a great stop, what's it doing back underneath where everyone was shaking out? Anyone have an idea of what might be happening here? You didn't buy the breakout, but Mr. Market's going to let you buy it after the Syria event at the breakout again a day later, just to give you a chance, because he wants to help everyone just make bushels and bushelfuls of pips and cryptos and gold and silver coins. So anyway, this could turn out to be a false breakout, which would have a lot of people, you need closes in the candle underneath it. Shorter term, yeah, we could get one more shot up towards 68. I'd love to see it because I would count this 1, 2, 3. Everyone with me on my analysis of the crude oil market? Basically, be aware of a false breakout. And failed breakouts are sometimes the best trades because everyone's wrong-footed, right? So I also want to take a look at the yen here. Here we go. Still looks okay to me. I had someone ask me, is this a 1, 2, 3? I don't know. Maybe this is 1. We check the breakout. The formation actually measures 109-ish on the weekly or even the daily. Measures up towards here. You take the width of the formation here and tack it onto here. Could even give you 110. But 108.10, I think it will be an area for reaction. So I'm thinking this is 1, this is 2, and we'll get a 3 up here. So looking at the potential of the yen peaking somewhere around 108.10, 108.20, don't think we're there yet. And really, you're not going to know until it negates a channel back under 106.40. So those are some of my views. The last one would be the metals. You know, every day I sit here and I think I'm missing the gold. It's going to break out. It's got this real bullish formation that's been developing. You could actually call it an ascending triangle from here to here, which is a big formation. It's 300 bucks. But here's where I want to buy gold. See where these lines are intersecting, about 1290. Here's your daily. Down here, be in between halfway and 61.8 down here. So I still think I'm going to have a chance to buy it there. What's telling me that, and I could be dead wrong, is the mining shares really didn't have, during the pop we had in gold last week, wasn't that impressive to me, although the silver shares are acting better. And silver, if I'm right about gold, I know you guys will think that I'm, smoking something. But I think there's still potential to break down to, like, I think Stelios has talked about it, 1550. I mean, if I really wanted to get bearish, I would look at the intersection of this line for the bottom of a falling wedge, and that comes in at 1460. So, but looking to buy a break in the precious metals, I think it could be in, maybe a 3 to 6 month hold period. And that's about it. I'm out of words. What are you thinking, Dale? I'm thinking thoughts. Give me a Y if you're thinking thoughts this morning on Monday. Anyone else? Anyone else besides me? I know Blake thinks thoughts. Say that 10 times fast. So on the week ahead video, Blake was talking about the yen crosses. So I'm going to be interested to see what he thinks about these yen crosses. Especially since it's kind of weird because the dollar looks bad, but you're tempted to short yen crosses. I feel conflicted about it. So how are you today, buddy?
Good morning, Dale.
How are you, Blake?
I'm doing fine. I got up a little earlier than I wanted to this morning, and I actually just peeled off some Aussie New Zealand longs that I. That
was a good trade, buddy. That was a nice trade.
I'm still buying the dips.
Is like 640 a big level to you now, or excuse me, I mean 540, the wedge breakout. Would you allow for like a retest of that?
Yeah. Here, let me grab the charts really quick. There we go. Okay, so we hit the 38% retracement. If you use ForexAnalytix, you got an update about that a little bit earlier. Aussie New Zealand basic technical analysis. The Aussie New Zealand had reached a 38% retracement at 105.93, which we hit it, and you can see it's come down about 15 pips or 13 pips since then, and I sold it up there at 91, and but I'm buying dips here, so I still will choose to buy dips. Now, as far as the dollar goes, you got the euro. It's pushing up against some resistance here. You asked me about the yen pairs. The yen is it's a little weaker against some currencies right now, like the euro and the pound, just because the pound's so strong. But which I'll talk about here in a second. But I think we have to see the equity markets pull back, and obviously the equity markets are taking the Syrian strikes with a grain of salt and in stride. And as I really expect, I did not expect there to be any real reaction to the strikes over the weekend. So it's because it was a one and done type of thing. We haven't heard any more rhetoric from Russia. I do think that if that would have happened during market hours, we would have sold off and bounced back. So, going back into like the dollar yen, we're still sitting in the big, resistance zone. You can see in the big resistance zone here, and I still think the dollar yen is trading pretty heavy. I wouldn't want to be long at this point, but I think in order to really be short, we have to dip back through this channel.
Okay.
So there's not a ton to do here with the dollar at this moment. I mean, the euro, like I said, the euro is pushing up against some resistance. We're pretty range bound here. The pound, if you guys didn't catch it, we just hit the 127% extension of this last move lower. We've been looking for this rally, but now that we're here, relative strength is a little divergent, a little overbought. I don't know how excited I'd be about being long the pound necessarily at this moment. I had some bids in the pound New Zealand about 150 pips lower as soon as the market opened, and they didn't get triggered, and we've rallied quite a bit. But looking at the dollar right at this moment in time, I'm just not. I can't say that I'm excited about anything really. I am still long some dollar Canadian, but the dollar Canadian really needs to get above 126.30 in order for me to get more bullish about it. But right now the dollar is relatively weak. I got to see I have to see if there's any type of reaction here in the euro up here in the 70s. The Aussie is underperforming. The Kiwi is underperforming. The Canadian's just sitting there. The dollar Swiss is, you could say it's wedging actually. If you did this, you can see the dollar Swiss is just kind of wedging here, and there's no real reason to be super aggressive, long or short anything at this moment. I don't think. I just don't see it. And the market should, in my opinion, it should loosen up soon. I don't know if we do have retail sales, which obviously I'm going to have to prepare for. I don't think that the retail sales today, here, let me refresh this browser really quick. I don't think the retail sales today or the Empire State Manufacturing is going to really move the needle as far as the dollar goes. But you never know. Maybe it is the data that cracks the dollar one direction or the other. The U.S. dollar Mexican peso is still trading pretty heavy. You talked about precious metals, that they're just kind of there. I do look at I look at the precious metals and I do believe gold's going to eventually break out. I do. It feels that way, but at the same time, I'm looking at the FX market, and the FX market isn't really confirming that yet. So it's not like I see the dollar yen dropping below 106.60, and that would really be more of a confirmation that gold's ready to take off. But I just don't see it as of this moment in time. So I'm just pretty much sitting here trying to be patient and finding something to trade. And these are the days that you have to exercise patience. You have to exercise some discipline and say, this is where I want to own or short a particular pair, and just wait for those prices to get there. They might not get there. I have some bids in the Aussie New Zealand at 105.50. I don't want to chase it up here, and like I told you guys already, I already sold mine, but I want to buy dips back down here It may get there, it may not. If it gets there, I'm willing to be a buyer, but I don't want to, start
this lesson,
getting myself in the market right now.
Blake,
Yeah.
and I know you've taught before, this is the toughest thing for people to learn because, like our t-shirts with FOMO, that's a big psychological hurdle because people always feel they're missing something. And
Absolutely.
to be able to sit there, someone asked me about the S&Ps. I said, I don't know what to do here, but at new highs I will, or after a washout I will. So, it's hard to wait, but what? It's harder to force trades and live through drawdowns. So that's your choice.
Yeah, it really is. You have to be patient and wait for the market to set up. I mean, because I'm a little conflicted about the dollar because I still see the dollar and it's like, okay, well, we're range bound. I'm not necessarily bearish the dollar. I'm not, technically I'm not convinced to be bullish either. But at the same time, I don't think I want to be bearish yet.
You don't have a high quality entry. That's why to do right. Isn't that it? So it's all about your entries.
It is. I mean, I guess if I was, on
a breakdown of that channel, I bet your tune will change.
Of the channel. You mean
the uptrend line that it's
right here?
Yeah.
Yeah. I mean, if that broke, then it's a different story, and then we're really talking about, a potential move. But right now, I'm not thoroughly convinced that the dollar is breaking down yet. And I mean, and obviously, I'm looking at the cable, going, okay, well, the cable's strong, but what other dollar pair right now is showing strength? Nothing. It's really just the pound that's moving the dollar lower at this point. And yes, the euro's bounced 30 pips, but who cares? The pound's up 60. The pound's one that's like trucking higher. And I do look at the speaking of the pound, I mean, we're challenging some pretty key resistance. What if the pound stops here, and we don't make new highs, and then it starts to reverse? Then we're at risk of a much bigger dollar bounce because the dollar has not really reflected this weakness in the euro or the Aussie or the Kiwi or the dollar yen. So I think that I still think that the risk could be here that the dollar starts to gain some strength. Does that mean I need to run out and start shorting the pound? No, I think if I want to short something, let me take that back. If I wanted to buy the dollar, it'd be against something else. It'd be maybe against the Kiwi or the Aussie, but or maybe the euro. The euro itself is. It's kind of floundering around here too, but I think the euro has to get below 123 in order for me to get more excited about the prospects of a euro reversal. I do like the dollar Canadian, and I think the dollar Canadian, and I'm long, like right here. I mean, actually I take that back. My cost average from last week is in the 90s. I mark to market every day. So, my cost average is basically for today, it's around here because, the dollar Canadian is only up a couple of pips, but I was, really acquiring most of my dollar Canadian down in the 80s and 90s. So, but the dollar Canadian is one of those that it hit the 618. It basically completed a head and shoulder pattern, and, crude oil is now slipping because of the, what happened in Syria, and it's not, it's probably a one and done. It shouldn't disrupt the oil supply much. So, the dollar Canadian might be free to actually squeeze a little bit today, and so this is the one that really is mostly on my radar right now is the dollar Canadian, and it also happens to be my bigger position on the board, you know. And I want to even be more aggressive, but I've got to see it break above 126.30, and until it breaks above 126.30, I can't get super excited about it either, you know. So this is a situation where you just have to be very patient and wait for the market to show its cards versus you assuming you know where the market's going to go, because I think the dollar is going to strengthen here, but it doesn't mean that it's going to, and I'm just making some assumptions based on, you know, how I feel, gut feeling, or what I'm seeing. You know, it's not anything that's showing me the dollar is ready to start, you know, really strengthen here. So, and going back to equities, I mean, I look at the S&P, which, you know, obviously is the broad market that we should be all really paying most closest attention to, and you know, the S&P really has to get above this 2680 in order for it to turn really bullish. You can see this tightening of this wedge, you know, and that in itself is telling you that the market is probably going to be breaking out pretty soon, and it's going to get, the volatility is going to start to pick up, and we got to wait for it. And then once it starts to happen, see, you know, what does that do to currencies? You know, if it breaks higher, you know, does the dollar Canadian slip to new trend lows? Does the Aussie and the Kiwi start to bounce again? Does the dollar yen start to rally as we break out? Or, you know, flip side is, you know, we break 2640 somewhere over here. I'll just, you know, kind of outline it. Now I'm going to get rid of this here in a second, but we break like 2640. You know, does the yen start to strengthen? Does the dollar strengthen on risk aversion? You know, those are all questions that we really won't have answers to until we see the stock market really start to move one direction or the other. You mentioned crude, and you know, looking at the crude oil market, I think the thing that's scary about crude where it's at right now is that breakout last week. It leaves longs vulnerable. Excuse me. You know, you have this weekly candle that looked pretty bullish. You know, for some reason we slide back to like $64. I mean, there's going to be a lot of longs that are left hanging at the highs.
One of your favorite setups, breakout failures.
Yeah, I mean, these failures. I love them because I love it when it catches the market off guard. And I'm not saying that I'm immune to being caught off guard, because it does happen to me as well. I'm just saying that, but when the market is caught, you know, wrong-footed on a breakout or a breakdown, and then it completely does a full-on reversal, that gives you a lot of opportunities as far as, you know, trades to be had, and then also, you know, correlations to take hold of. I mean, if you know, crude oil really reverses, I think one of the best trades out there is long dollar Canadian, because, you know, crude will probably sell off, and then you have weak crude, which typically will translate to weak Canadian currency, or maybe weak Norwegian krona, something like that. And in this case would be, you know, dollar positive. So you'd have dollar Canadian strengthening.
So you have another reason for probing the long side of Canada.
Yeah. This is one.
It's good to have a lot of reasons, isn't it?
Yeah, it's feeding into the, you know, the thesis of why I want to be long the dollar Canadian. You know, is that going to make me right ultimately? No, but it's a process of elimination, making sure you have, you know, you're putting as many you know, probabilities in your favor. You know, so if I'm looking at the probabilities of my trade working out, if I have, you know, more probabilities slanted towards the idea that it's going to help my trade go in the direction that I'm hoping for, well then, you know, that's going to leave me better off. Doesn't mean that I'm going to be right, but it does, I think, help in the potential outcome of what you're doing. So anyway, that's kind of what I'm thinking right now. And just one last note before I turn it over to Steve and Stelios. You know, this dollar yen, I really, I'm looking at it as a possible short if we fail up here. I like the fact that we did a false breakout on Friday. You notice that false breakout here. I know we're higher right now than where we were when we closed on Friday, but that candle on Friday is a long upper shadow doji, which tends to be bearish. It's they kind of work like a gravestone doji. So, you know, if the dollar yen closes below 107, I think that's going to be a pretty bearish event today. So anyway.
That blue line, Blake, that you have at 108.08, is that a fib?
No, it's right here. It's previous support.
Support. Okay.
Yeah, back actually a year ago, April of 2017. So, you know, so it's that's a failure point up there. I know we spiked below it before, but it still represents a pretty big, you know, a pretty big previous support. So I think that's all going to be, and then on top of it, it's also, you know, if we get back up towards 108, it's you know, the breakdown point. You know, this is the major breakdown point below 108 when we cracked out of this triangle. So I think that any move up to 108 is going to be sold. So I'd love to see us back at 108 in the dollar yen, because I'd be glad to be a seller up there if it happens. I just don't know if it's going to happen or not. So, but that's what I'm looking at for today. I do want to turn it over to my colleagues Steve and Stelios. Guys, are you here?
Hey, Blake.
Hey, good morning, Steve.
Mate.
How are you doing?
Have a nice week. I'm good. How have you been?
Good. I'm just kind of, you know, I don't know if you were listening in, but you know, just trying to figure out what I want to do here. I'm not really convinced on the market at this moment. I'm not.
Yeah, I think it's several weeks now that, you know, it's so and so, right? I mean, conflicting signals and undecided dollar, etc. Not an easy thing to do. And stock markets also not clear if they want to resume lower or rebound from here.
Right, and you know the you know, you look at the pound, and the pound's really the star performer as far as dollar weakness goes right now, and it's really the one that's been showing us the way. But I'm not convinced either that the pound's, you know, extremely bullish. So I'm just kind of looking around trying to figure out what I want to do here, and I'm not sure if there's much clarity. So.
Yeah, I think we need to be a little bit more patient, although, you know, there are some opportunities out there. I mean, some things that are technically better looking than others, but definitely, you know, the past few weeks, I think show that, you know, we need to remain a little bit patient and, you know, wait for the market to be a little bit more decided of what it wants to do before it starts getting a clear direction, both in risk and having to do with dollar pairs. So, you know, as you very well know, that's part of the game. Sometimes you need to be more patient. You know, if you don't want to be out of the market, probably the solution is less leverage and, you know, more careful in taking positions. I don't think there's much more we can do.
Right, and I hope that maybe that, you know, I know you're going to see a lot more opportunities in the cross rates. I left them for you because, you know, I've been looking at the pound, like the pound New Zealand and the euro pound. I think there's some better opportunities in some of these cross rates. And like I said, I didn't want to steal your thunder. I'm going to give you plenty to look at. So. Good luck today, you guys. Have a great one, and I will. I hope everybody had a great weekend, and I appreciate everybody being here. And you know, I'll be back with you tomorrow morning.
Okay, mate.
All right.
Have a nice day.
Thanks, Steve. Thanks, Dale, and Stelios. I know he'll pop in, and you guys have a great day.
You too, mate.
Thanks.
Okay, let me grab the screen. Dale, how have you been, Dale? Dale? Okay, obviously the coach is AFK, so let's go ahead and have a look at a few things. I know that Blake talked about, you know, most of the major pairs. Hey, yeah, now I can hear you, mate.
Okay.
So I know that Blake talked about most of the major pairs, but I think that, you know, there are things we should look at. First of all, let me begin by, I know it's not very popular, but, you know, Blake was also showing the USD SEK at some point last week. this was my view on the USD SEC. I thought that this was a flag, and I wanted to see a push towards that area of resistance, the 850, roughly, let's call it area of resistance. And we're finally here. I'm showing this. We also had like RSI divergence since, quite a long time now. Like it's more than a month that we've been showing RSI divergence, and I think that this is one USD pair that is knocking on resistance as we speak, and knowing that it's quite strongly on occasion inverted correlated to the Euro USD. That might also signal that Euro USD might have more strength from here. Obviously, Euro USD is in the middle of a triangle. Triangle is the closest interpretation to reality, I think, at the moment. That might prove to be a bull flag or whatever, although I think that it's too long now to be a bull flag. So I think that the triangle is the best interpretation. So we're in the middle of it. But still, my opinion is that the chances of a break higher from here are quite higher than the opposite. USD Swiss, as we talked about last week, also shows the potential of that happening. Why? Because it almost hit a triple confluence, actually quadruple confluence of resistances. It's this descending trend line you see here. It's the 200 DMA. It's the resistance from this ascending wedge. It was also the 50% fib of the last move lower. So I think that technically RSI is also trying to roll over here, as you see. It's barely holding this trend line. So I think that USD Swiss shows some good intentions in at least pushing lower for at least a correction, if not something more than that. So in this case, if that gets confirmed, if in essence we break down below this ascending wedge, I would be looking for a move towards 94.30 to begin with. This is a very strong horizontal area of support, and afterwards, if we break below there, we can be talking about a resumption to the downside. So USD SEC, USD Swiss might be also pointing the way for the Euro USD, which currently is stuck in the middle of the triangle. So Euro USD itself is not showing some technical signal yet that something is happening, but the others might be showing that that might move in the same direction as well. Now, treasuries. We've been talking about them. Treasuries, remain weak. They remain under pressure. Obviously, I've talked about many times that this is a very weak correction. It's more or less a consolidation, a bearish consolidation after a strong move to the downside. We are getting very close to the point that if we violate this trend line support, I think that we will be calling the end of this consolidation, and then another push to the downside. In order for us to find some targets for that, we will obviously need to use some fib extensions. So, for example, if we assume that we're headed to new lows from here, and that's of course only an assumption, but it doesn't hurt looking ahead. So if we assume that we're getting lower, I think that 119 is a very easily achievable target. Is the 161.8 extension from this little correction, and that's a very minimum target in my opinion. So definitely, I would say a daily close below 120.45 will open the door for a move towards 119, if not lower from there, with whatever implications that has for dollar pairs. Especially, let's be honest, the USD yen, right? USD yen, in my opinion, is holding quite nicely. It's definitely not showing that it's about to roll over from here. I'm still absolutely not convinced that it's bullish in any way. So I'm in agreement, with Blake on that. But I do see that there is a very, very high probability that we will see some more strength before we actually roll over. So, Blake talked about 108. 108 is definitely a possible reaction zone, a possible resistance zone. But personally, the confluence of resistance is at 109, 50% fib, and the broken ascending triangles support, the broken ascending triangle support. is also a good target. So, we have some distance to 109 with whatever other implications that might have for risk assets. I'm still long, by the way. I'm in the money. I'm looking for higher prices from here. Now, obviously, it's not a slam dunk trade. I mean, somebody should be careful. There is, there are two sides of the same coin. I mean, if you go down to the 4-hour chart, I've shown this many times. This is inverted head and shoulders. On the other hand, somebody can say a consolidation after a strong move lower. Then we had a correction, then another move down. Perhaps this second leg lower is not complete yet. It might need to reach a quality target. We have an equality target towards 24.53. Personally, I also like the 2400 area. 2480 is also a good area of resistance. So, why not one more leg to the downside? And that might actually manifest. But in the short term, I still see the potential for more strength. There's also the potential that we're within a triangle that leaves quite a lot of upside before finding resistance once again. Even a move towards 27, 25, 27.30 will still not violate this triangle formation. So, looking at the S&P, it's okay. I mean, you can make both arguments. Personally, in the short term, especially seeing USD yen as well, I feel okay being half a position long, and I'm in the money, so I'm going to babysit this position. I don't want it to get out of hand, but definitely I think that there is a chance for that to work out. Now, having to do with some other indices, I think that we need to pay attention to the fact that both the DAX, here it is, you can see it here, hit resistance, and it's actually showing some reaction from here. Same with the FTSE. We were talking about initially, after we got the rebound from new lows, we were talking about the 7,100 zone as a resistance zone. We sliced through it, and then we said that the second zone is this one. You can see it here, the horizontal zone, and we seem to be reacting from that. So DAX and FTSE finding some resistance here. Now, it remains to be seen if if this is going to be a short-term setback. Same with Nikkei, by the way, also found the resistance zone. Seems to have stalled here, but to be honest, not rolling over yet. So perhaps it's just a zone that will be good enough to stall the move to the upside. It remains to be seen. But definitely, you need to note that several indices have found resistance and seem to be initially reacting from that. Now, nothing more to talk about having to do with the cable. Only one thing I want to show in the cable. I don't know how important it is. I have a trend line here. You can see it here. It's the red intermittent trend line, which seems to have captured every single high we've had recently in the market, with the exception of this overthrow that you see here. So, the cable is once again testing that trend line. I don't consider it necessarily to be very important, but on the other hand, I do pay attention to it. Also, consider that this is the 7th consecutive day today that cable has been up. So, why not? We might see a reaction from here. We are also getting very, very close. I mean, we are just 50 pips away from the 78.6 fib from the move lower we had post-Brexit. So very close to fib resistance as well. Consider that this same fib resistance was the one that rejected the cable at the end of January, right? So wouldn't really surprise me to see some type of a pullback from here. But I need to reiterate here that we have no confirmation that we are about to see a big reversal having to do with the cable. Momentum is definitely not eye-catching. I mean, the upside momentum. We're definitely seeing some strong RSI divergence, which we also need to take into account. But that doesn't mean that we should try to, call it a top. For me, an important level is also, a couple of hundred pips higher, the 145.37. That's the 50% fib from the last bull leg we had, bear leg we had from the summer of 2014 when we were trading back at 170, 170. In general, we are entering, an area that can actually stall the move higher, but we have no confirmation yet. So I don't want to be long, but on the other hand, I don't have a signal to be short either. Now, Blake talked about the crosses, and for a good reason, because the crosses have been some of the interesting things to be trading, the past couple of weeks actually, because as we said, the USD has stalled. So the equivalent crosses have stalled. But I have to say that if we start seeing at the crosses, for example, Euro-Aussie found resistance at a very interesting area. It was an area we were looking actually to hit. It was the 161.8 of the last corrective move lower. We said when we were breaking higher from here that that's going to be the ultimate target. We hit it, and then we started falling lower. The question is, what kind of a move was the move lower? To be very honest, so far the structure tells us that this was a corrective move. Why? Because simply I can easily count this as an ABC. We also see that on a daily closing basis, we found support at a very interesting area in the market. I mean, this area has acted as resistance and support several times in the recent past. And the move lower has also been channeled. So if we do break above this descending channel, I think that more or less this will confirm that we called very nicely a high here, but it was a high that produced just a corrective move lower, which isn't a surprise, because in general, when you are looking at a move that has been unfolding since February 2017, so that's now what, 14 months. So during the past 14 months, we've definitely been in a bullish trend. Your first intuition should be that any move to the downside should be considered as a counter trend move. So this is the deal with the Euro-Aussie. Now, if we have a look at the Euro-Kiwi, you can see that we found support also at an area we're looking for. By the way, I booked half of my short on Friday for whoever was in the chat room. I wrote it there. So I now only have half a position. That was a nice trade. I'm still holding the other one. My limit order is at break even. I think there is a good chance it's going to be hit actually, because it found support at an area that you would expect to find support. This was a triple area of support. To be honest, it was a confluence of supports. Unfortunately, they had a limit order here. It wasn't hit for just a few pips. We find here the 200 daily moving average is 78 higher, and as you see, it's also a horizontal support area. I mean, in the past, we found support resistance multiple times there, so it's a nice area to be seeing a rebound from. Now, on the other hand, Euro-Kiwi has been the weakest one, so I think that as long as we remain between 170, 130 and this low that we found here, it's good to more or less remain neutral, especially for the Euro-Kiwi. I would like to see a break above 170, 130 before I actually can turn bullish. Now, let's have a look at the EuroCAD as well. EuroCAD, initially we were looking perhaps, I mean, at the very, very beginning of the correction, I said that the 38.2 would be a nice target to hit. Then we started consolidating there. I said that perhaps it wants to go lower. It found support for the time being at the 50% fib. I think that's a good area to see a rebound from. But even if we move lower from here, we will not be violating the equivalent uptrend we've had. So even if we see a move towards the 61.8, we won't be violating the uptrend. Regardless, I think you should respect the upside. I think that if we see a little bit of a continuation here, taking into account Friday's hammer, daily hammer and the continuation we're seeing today, there is a good chance we might have found the low. We need to be a little bit more patient, but this seems like a good area, a good level. So I tend to believe it if we see some follow through. Okay. Now let's have a look at the pound Aussie. The pound Aussie was outright a lot more bullish. The pound crosses in general were a lot more bullish than the equivalent euro crosses. You can see why, simply because the pound Aussie formed a bull flag. So instead of breaking down even more, it more or less consolidating. Now, is this a bull flag? Is this a triangle? The answer is nobody cares. Doesn't really matter because both formations are bullish continuation formations. Trend continuation formations, in this case bullish, right? So we're currently testing resistance, as you see here. If we close above this trend line resistance, I think there is no question that some type of an extension from here will take place. Now we can easily find some initial targets by using some fib extensions. Let's have a look. 161.8 at 187.13. So, I would say first target would be there. Okay. And let's have a look at the pound Kiwi as well. Pound Kiwi, a different kind of formation. It was an expanding triangle, regardless how you want to see it, still a corrective formation. We held the 50, the 50 simple daily moving average. We also didn't violate this ascending trend line support, and we are currently breaking up both from this descending trend line and this horizontal area of support resistance. So I think that the pound Kiwi looks good as well for at least a move higher towards the 198.40 high. So as you see, all these crosses seem to be completing some corrective formations and to be resuming to the upside. So let me have a look at the DXY as well for you. Whoop, that was hitting the wrong button. I'm gonna fix it. There we go.
Yes, these are all recorded on our YouTube channel.
Oh yeah, the webinar is streamed live every day, but a couple of hours after the webinar is over and the interviews are over, you can find them posted on the ForexAnalytix channel on YouTube. So if you go to YouTube and you just type ForexAnalytix, you're going to find the ForexAnalytix channel. You can find there everything posted. So now, having to do with the DXY, I know that we're still in a consolidation, but given the strong downtrend since the very beginning of 2017, and I know we said that multiple times, and given the nature of the corrective move lower, I think that we should treat this as a bearish consolidation, right? I mean, there was a rebound. Yeah, there was a rebound from the area we were looking for support, but there was no momentum. There was there was no continuation. We hit
Sideways.
the first. Yeah, there was a. Yeah, exactly. We got rejected once again from the first area of resistance we had indicated, which was the 91 area. And what happened from there? Nothing. I mean, we started consolidating. We started consolidating lower, and eventually, I think the index wants to break to the downside. You can see how close we are already at this channel's support. I think that if we close below 89 and change, especially if we confirm a close below 89, we should be seeing lower prices. Now, the
King Dollar, Steve, is there's a palace coup on King Dollar by China and Russia. The kings of the palace coup.
So the question here is the following. Let's assume that we are right in this assumption that there is more downside coming for the dollar. Is this the place to be selling the dollar? The answer, in my opinion, is it depends on what kind of a time horizon you're looking for. So, because let me be clear, I do think we're going to be seeing new lows in the DXY. So I think it's quite likely. But do I think that this is a good place to be selling dollars in the medium term? I think probably not. because I think that the market is too comfortable with the short dollar thesis. And I think that at some point, which we haven't seen so far, we're going to see like a big snapback. I mean, a big reaction to the upside. Now, will that come with some big risk-off event? In which case, the market is going to be cashing out, and this is going to be causing the dollar to be bid. Might be the case. Will it be something else? I don't know, but definitely, I wouldn't feel very comfortable. I've said, if you remember, Dale, months ago, that I think that we've entered a period in which, instead of being outright short the dollar across the board, we've entered the period that it's much preferable to choose your fights. I mean, there are some pairs that you can be long the dollar, and there are some pairs that you should be short the dollar. So I don't think we're going to be seeing necessarily from here like some broad dollar weakness across the board. We might see the DXY push to new lows simply because, for example, only the Euro USD and the cable are like what, 3/4 of the DXY. But that doesn't mean that the dollar is going to be weakening against everything, right? Now, speaking, because you mentioned Russia, I need to remind here that we saw some intervention last week from the Central Bank of Russia. I mean, there's no question in my mind that the 65 level was strongly defended from that. But what I said is that these interventions, they don't work. They usually only work in the short term. So I do believe that even if we get lower towards the 60 level, the USD ruble, Russian ruble, should be bought. And I remain of the same opinion. So, for example, this is a pair in which I would be looking to be long the dollar. Okay. Now let's have a look at the USD/TRY as well. As you see, this also found some support. As you see, many of these currencies, the dollar has been getting a bid, right? So let me open the question box and let's see what you guys and girls want to see, and if we have some things we haven't already mentioned. By the way, Dale, you mentioned crude. I have to tell you here that today's reaction is a strong reaction. I understand that coming from new highs makes everybody immediately consider the possibility that this was a false break to the upside, and this is a good place for the market to actually roll over. It can be the case, but I wouldn't be jumping into conclusions yet. Personally, I would still want to see even higher prices from here. I would want to see the market being really convinced that a new leg to the upside has started unfolding before seeing a rejection. So my intuition still tells me that there might be more upside before we actually push to the downside. I'm actively looking now to be short crude at a new high, but I'm not seeing that signal yet. So I have to mention that. Craig says, Dale, that you sound like you have a cold. Do you, mate?
Oh, I don't.
Okay. There's a question about the metals. Yeah, it's the allergy season for sure. There's no question about it. Okay, now there's a question about the metals. I have to say here that there's not much to add than we said last week. I would still favor gold breaking to the upside. We haven't seen that yet. For that to happen, I would want to see a daily close above 1,355. So that hasn't transpired yet. If that happens, I would want to see a move towards the 161.8 of the range of this triangle. That would take us a little bit higher than $1,400. But confirmation is needed. Silver, a lot more complicated. It also looks like it wants to break above a very tight consolidation. But even if it does, oppositely from gold, it will still remain within a longer term consolidation. So I think there is no question, if you want to be buying one of the two metals, I think that buying gold on a break above 1355, on a daily close actually above 1355, is a much better opportunity than trying to buy silver at the moment. Silver, it's been horrible to trade, horrible. I mean, my long-term thesis, is for a stronger silver, but I think that we're not even close to seeing that. Now, having to do with with palladium, after hitting my target here, it has been in a V-shaped recovery. In all honesty, I mean, we are from $900 to $1,000 within, like, what is it, less than 2 trading weeks, right? But keep an eye here. We're definitely hitting some strong area of resistance. We might see a pullback from here. If we do, watch 960, 965 as support. I do like this reaction higher. This actually increases by a lot the chances that the move lower was an ABC corrective move, in which case I'm actually, it makes me interested in actually being in the opposite side of palladium, meaning buying palladium. But as I said, I'm not going to be buying it here. I'm going to be actively looking to buy it, though, at 960, 965. I have absolutely no problem of trading it within a month in both directions, right? I mean, I try not to have a bias other than what the chart tells me. Now let's have a look at copper as well. I maintain somewhat of a bullish bias, but I would definitely want to see a daily close above 316, 317 to confirm that something like that is happening. I was a lot more bullish, but it's been taking a long time, and whenever something is taking a long time, it makes you feel less comfortable with whatever direction the market you were looking for. So, but still, I would favor a bullish breakout, right? A close above 316, 317, and I think we'll be confirming that something like that is starting. Until then, nothing to see, in my opinion. Let me see if there are any more questions. That has been covered. I'm going through a lot of them because we've already covered them. Who do we have for an interview, by the way, today, Dale? Dale? Okay, let's have a look at the punt.
We have Adam Grimes today, Steve.
Okay. Stel, any comments from your side?
Not really. I'm it's all going sideways. Like the dollar, which is the main driver, is still going sideways, and as long as that's happening, I have really nothing is changing on my side at all. I mean, it's good. It's nice to see the pound strengthening a little bit. I've been a bull for the pound for weeks and months, but the next major move, we don't have the sign yet. It's going to be driven by the dollar, in my view, and we're still within 88.5 to 92 is the range in the Dixie. We're getting towards the lower end, but I don't know if it's going to break either way, so we're still waiting.
Okay, two more things I want to show before we start the interview. One is the Bund. The Bund, might be breaking lower from here because we're breaking below this ascending channel. But personally, although I was looking for a high, at exactly this area, and it was the confluence of the 50% fib of this move lower, and let me show it, of this move lower, and the 61.8% fib of this move lower. So far, both the RSI's move and the price action here don't convince me that we've actually found a high. I mean, unless we see some acceleration happening right here, right now, within the week, I do see the potential of another push towards this 61.8. Okay, so I'm a little bit unconvinced yet that the Bund is breaking lower, although that was an area I would gladly see that happen. Now, I also have a question about the Aussie and the Kiwi. I have to say that not much to add here. I mean, I see the potential of another push to the upside for the Aussie, and as long as we remain above 0.7740, I would definitely not be bearish. But still not much of a momentum, and I do see the potential of a higher Kiwi. Although having been trapped in a range for some time now, we definitely need to see a break above 74.36 to confirm that. Definitely watch this area as support. I mean, the area that Kiwi is currently testing, because we might find support here. It looks better to the upside than to the downside. I have to admit that. So I would favor strength, but not with conviction. You know what I mean? So that's why I haven't established any positions yet here.
Are you strongly neutral?
No, I'm actually slightly bullish, but I don't do things when I'm slightly anything. You know what I mean?
Okay. Sounded strongly neutral to me. Thank you for your analysis, bro.
My pleasure, Dale. Enjoy the interview.
You're very creative when there's not that much to talk about. You find
no, there is always, if you monitor a lot of markets, there is always something to talk about. Trust me.
Yeah, I believe it. And you do a great job, Stel. How are you? You doing okay, buddy? Sappy?
I'm very well. I'm very well. The background noise is my two daughters, so please excuse that.
Yeah,
that's okay.
So it's about time you have a son as well.
Yeah, no thanks.
All right,
I can give you mine.
We're fortunate to have Adam Grimes with us. I've been to his website. So Adam, welcome to FACE. I'm going to make you the presenter and look forward. I'm not sure that I've interviewed you before years ago on FX Street. Maybe you could straighten out an old man and tell me if this is a repeat of you and I talking to each other.
Good morning. How are you guys?
Good, Adam. How are you, buddy?
Good, fantastic. Cannot complain.
All right, Adam, you and I never did this before, did we?
We never did this. I think I did it. Gosh, I apologize. It's been a few years, and I have trouble remembering what happened last week sometimes. But I think I did more like a planned formal webinar presentation for you. But okay. I don't.
Okay.
Don't remember the details.
So we're seeing a representation of your mood. I have a black screen right here.
No, actually, I don't really know. Let me see.
Yeah, share the screen, and then you pick the device or monitor you want to show. And
yeah, I have. I think that I'm just trying to figure out what will be, because I don't really have a live screen that's set to share for webinar, but I think I can share like a SIM login here. Give me 2 seconds. I'll pull down from another computer.
Otherwise, as we're talking about the markets, I could show them and your website as well. So why don't, as long as we're out there in the ether, okay, there's a look.
How's that?
We have on crude, beautiful.
Good.
All right, so Waverly is a newsletter that you write?
So yeah, I have two current projects, and it's good to talk about them because they may look similar, but they're actually very different. So I have Waverly Advisors, which is, as you said, essentially a newsletter. It's actually an institutional retail. I'm sorry, I'm thinking too much. Here, I'll show you. It's an institutional advisory product. So you can see here we go through basically a review of what happened last week, major markets, and then talk not just, of course, about news, but about setups, predictive value. Right. We're looking across everything: stocks, currencies, futures. Waverly has a very heavy focus on futures and on volatility. So that is my, if you want to read in a very concise way what I think is going to be happening in markets, Waverly's the place to find that information. That's Waverly Advisors with an O.com.
Okay.
My other project which is pretty new. We just launched the last part of last year, is marketlifetrading.com. And that is explicitly educational. And one of the things, you know, we can talk trading, we can talk life and philosophy and all this other stuff too this morning if you want. But one of the things I've really realized over the past few years is just how much I enjoy teaching and how much I have missed teaching, because as I've been focusing on building Waverly, I have not done a lot with individual traders. You know, my focus has been more institutional, and also, you know, throw in the mix, frankly, how bad a lot of the trading education is. My first, you know, my first few years trading, I had some success.
I wanted to get there. So, yeah, who did influence you? And tell us a little bit about your bad U-turns.
Well, yeah, so I think in some ways I like to joke and say that I am the unluckiest trader ever, meaning that there has almost never been, over the course of thousands and thousands of trades, because I was an active day trader for a while too, there was almost never a point where I did something stupid and got lucky. And there were plenty of times that I knew I was doing something stupid, and but it never panned out for me that I got lucky doing the wrong thing. And I think, you know, in reality, that was actually a very good thing, because I see a lot of people now who have you know, they're working a system without an edge, or they're taking unrealistic risk, or, you know, they just get lucky and they have that powerful learning experience, so they kind of anchor to it. My first couple years, I've started trading in the mid-90s. I graduated from college and really did not know anything about markets. I just kind of stumbled into it. I'm a little embarrassed to tell you, I got something in the mail, a guy with a cowboy hat. Some of you.
Oh, Ken Roberts.
Yes, you may remember. And I knew that trading.
One, two, three bottoms.
You got it. Yeah, and you know, I knew trading could not be that simple, because you know, the irony of this is that I today do use pretty simple patterns that would be, you know, on some level kind of in line with what Ken was teaching. But so I had the experience of, I opened a very small futures account, and back then paid about $100 a round turn, by the way. So as we're thinking about, you know, how commissions have changed, and that was high.
Well, you know, now I know where I remember you from.
Where?
I was your broker. That was a discount commission.
Oh, goodness. Well,
you know, for all the expert market timing, it was worth it. You know, exactly. You want to hear something funny, Adam? Yeah, I don't know. I'm in a little bit of a goofy mood, but, you know, I was a broker and I did have my own IB. Mm-hmm. And when people would bring up commissions, I would say, it's not how much it costs you to clear a trade. It's what you clear on the trade.
Oh, that's right? Great.
But you
great.
know what? But, you know, it does matter.
It does matter, yes.
Because that affects what you clear on the trade.
Yeah, it certainly does. Yeah.
Go ahead, buddy. Thank God I've changed. You know, I repented, buddy.
Well, you know, it was so I had the experience of opening a few small accounts and just churning through them very quickly. Had no clue what I was doing, and I made a lot of the you know, I shudder when I think about the kind of leverage that I was using, and I had no idea. You know, and I did the classic making mistakes by, like, I was short and, you know, I sold more to get out of the trade, which does not really work. And so I made those mistakes with relatively small accounts. And there was something, though, even though I was not really pointed in the right direction, there was something about the process that was really very exciting. You know, I just had the experience that a lot of things clicked here, and I knew that it would be worth trying to figure out. And I'll tell you, talking about brokers, it was actually my experience with broker that really set me on the right path of learning, because I had a broker that called me one day and said, okay, so you have a few $100s left in your account, and I've been talking to the guys on the silver floor, and they know exactly where this market is going. The floor knows everything, of course, and so we really think you should buy these calls. And oddly enough, we found this strike that would exactly, your account would be your full account value. And I said, the guy was just kind of an irritating salesman, and I said, well, I actually was thinking about going short silver. And he said, oh, no problem, we can do a put instead. And that was where it really became clear to me that, hey, this broker does not have my best interest in mind. Like, this is he's not working for me in the way that I thought. And it was also where the light bulb kind of went off, and I said, he might not understand the market like he does.
Yeah, a lot of brokers are really just salesmen.
Well, yeah, not just brokers, but a lot, as you know, a lot of people in various facets of the industry. And I think people from outside look at finance, and they say, everybody in this field must be so well educated, must know what markets are going to do, and on and on and on. And the reality is, as you said, a lot of people are in essentially sales jobs. And so I had to develop some quantitative sense and develop some understanding of how markets moved. And I was fortunate, this was kind of in the days, the early days of communication on the developing internet. And I ran into Linda Raschke, who we never worked closely together, but her work and her generosity, she spent a lot of time helping correct some basic misunderstandings I had, and I don't think that I would have been successful without her help and help of some other people who were successful. And I was kind of in the right place at the right time, and I navigated around. I started trading this. I'd call it swing trading today. I was holding trades maybe a few days to a few weeks. And again, kind of ironically, that's where I've navigated back to. But I took a decade-long diversion into pretty active day trading. And the first money I made was trading the British pound futures in the mid to late 90s. And that was, I was probably doing 5 or 6 trades a day. I was not trading the spot market, I was trading futures. And that was where, that was where I really, I was fortunate, because as a retail trader with a still pretty small account, I learned what it was like to get into a market, to get into a trade with utter conviction in a trade, and then to know within 30 seconds that I was wrong and to get out of the trade. And that's a very hard thing for people to do, but when you're an active trader, that's one of the essential skills. And it's one thing to read about it, but it's another to do it over and over and over, and to see the difference, what it feels like to be right and to be wrong. And so it was
you
right
can't
place.
learn experience; you have to live through it. It only happens with the passing of time.
It's so true. And one of my other current projects, which people will be hearing more about, and I'll tell everybody how to find me and get in touch. I'm writing a book, what I hope will be the beginner's book. I do have a couple books for trading. I won't say they're advanced, because I don't think there's anything that's truly advanced in trading. I think everything is basics. But I think to really understand, my first book is a 450-page monster, and it's just a little bit intimidating for a beginner. It does not really take somebody from the standpoint of, hey, I don't really know what a chart is, to here's how you trade successfully. So I just a few days ago, started writing this beginner's book. And the reason that we had that diversion is because what you said is just what I was writing about last night, that you can learn all of this knowledge. You can know exactly what the right thing to do is, but until you have some experience, until you have some experience managing the emotions and just some experience going through the process, you're not going to be successful. That's part of the learning curve.
I've always believed, and I'd like to ask you about it in recent years. We know it happened early in your career, but when I would manage money, I didn't look at, what their best years were in average return. To me, what was important was what was their worst drawdown.
Yeah.
So to me, the mettle of the trader is how they manage the market and themselves during a drawdown.
I think.
Do you have any rules, or can you talk to that subject through your own experience of going through drawdowns and where you draw the inner strength to, continue and instead of throwing in the towel?
Well, yeah, it's a very good question. I think one of the things that people need to realize, beginning traders, let's say optimistic traders, have this idea, because I was like this too, you have this idea, you're going to start trading and your equity curve is basically going to be a line that starts in the bottom left and goes to the upper right. Yeah. And in reality, every trading system I have seen has some type of drawdown. The only exception to that, I would say, would be, there are two exceptions, which are both worth acknowledging because they teach us something. One exception is if you're trading with access to what is essentially inside information. So if you have access to customer order flow, if you, let's say you're the exchange and you have access to some knowledge that is not accessible to the general public, you might be able to craft a system there that does not have drawdowns. And the other one, which is a little bit of a question mark, is very high frequency trading. And in my fairly limited experience with these, I think they do have drawdowns, but you're just, everything happens on such a compressed time curve that chances are by the end of the day you're going to be profitable, right?
Yeah, you don't notice it.
Yeah. So I think that's the first thing about drawdowns, is that traders need to be prepared. Not only are you going to have drawdowns, but you're usually going to be in a drawdown. That was kind of a revelation for me, because once I started making some money, I realized that when I was in a drawdown, I didn't really feel very good about myself, because it was all about trying, we're so competitive, it's about trying to fight back to that equity curve high and to make new highs. Of course, you want to be making more money. So that was my first observation. My second observation was that I was usually in a drawdown and I usually didn't feel very good about my trading. And then I thought, okay, so I started looking at other ways to trade and looking at other traders' performance, and it just hit me like a lightning bolt when I realized that most trading systems, no matter how you're trading, you're usually going to be in a drawdown. So that's the first thing you need to know. Drawdown's a fact of life, and you are usually going to be in a drawdown. The other thing is that you have to be prepared for. You can, of course, dial in your drawdown with the type of risk you take, but I would say, like every now and then I'll hear somebody says, hey, I want to make 40% a year, and I'd like my drawdown to be no more than 5%. And could you theoretically create a system that could do that? I probably don't think so, but if you could, you certainly couldn't do that every year. So I think people need to be prepared for probably a larger drawdown. I know we're talking in not very specifics here, but a larger drawdown than most people would expect, and just to understand that drawdown is going to be somewhat tied or very closely tied to your return. So, if the guy wants 10% a year, maybe you can do it with a 5% drawdown. If you're looking at 40% a year, you might have to sit through some years with some 25, 30% drawdowns. And the drawdown is very, very challenging for traders. And the sooner people wrap their heads around the fact that usually you're not going to be at an equity curve high, then it gets a little bit easier.
So, I like to use the metaphor of a quarterback who throws an interception. he doesn't come back to the huddle and dwell on it and go, oh, what a crappy play,
Not a good quarterback.
I don't know. Yeah,
Right.
yeah, I don't know.
Yeah.
Maybe I should go sit down on the bench for a while in a fetal position.
Yeah.
He just says next.
Next play. Right.
Yeah.
Yeah.
So isn't that really the mindset?
It is. Yeah.
And isn't the other big problem is that trading less, and we were talking about this today, and being patient and waiting for trades to come to you is also a very difficult thing for people to do nothing. And to do nothing is so important because there aren't always high quality setups.
Yes, and we're going through some pretty important truths here in this morning interview.
Yeah.
One of the cornerstones of my understanding of markets, and we haven't really, I actually like that we're doing an interview and not talking that much about me. My approach is blended, quantitative, and discretionary. And my formal background is I was a musician. I was a classical musician before I was a trader. So I definitely have that, artistic side, if you will, but I also understand that trading is a numbers game and statistics are very, very important. And one of the things when you start to look at markets and you start to do statistical analysis, one of the things that you see very quickly is that so much of what the market does is indistinguishable from random action. And you have to be careful how you say that because, from a practical standpoint, I say that markets usually move randomly. And people sometimes will object to that because they say, well, you can't really prove that it's random, which actually is true. It's mathematically you prove that something's random by the fact that you can't prove that it's not random is basically the proof process. But so I accept that usually when I look at a chart, and we can just kind of pull up some charts here. Usually when I look at a chart, most of what I see is random. It helps if I can type. And if I understand that, if I see a market, for instance, like the euro here that is chopping sideways, that is stuck in a range, that is a market for me that I have no business trading that market because why would I want to be involved in a market that is just moving randomly? And my best expectation is zero. If I do everything right, then over a large sample of trades, I won't make or lose money. Instead, my job has to be to wait for markets where I see there is, you'd call it a setup, just to put it in simple traders terms, but what it means is that I see some evidence that this market is moving in a way that might be something other than random or might be about to, and that's a point where it's worthwhile risking money. And I'll tell you where you learn that. You learn that day trading very quickly because you see when you're doing 10, 20 trades a day and you're keeping track of the trades that you did for a reason, and the only valid reason is I had a setup that was in my trading plan. And then you look at all of these other trades you do, and many of you who are day trading are probably nodding your head right now and saying, how many times do you do a trade because you're bored? You're punching through your pairs and crosses, and there's really nothing to do.
You mean impulse trading?
Well, so there's the boredom trade. There's also the impulse trade where, it's not really a pattern, but it doesn't really fit in my trading plan, but it kind of looks like a pattern, so I will do it. There's also the frustration trade. I've just had 3 losing trades in a row, and damn it, I'm going to make the money back, so I'm going to do a trade here. And in fact, I want to make all the money back, so I'm going to do this frustration trade on bigger size. And then if that loses, then I'm really going to go crazy.
Yeah, sounds like you've either witnessed it or lived it. And,
I've lived it.
I mean, I have to admit it. Everything you're talking about, as irrational as it is, emotions aren't rational. And I've done most of that stuff. So we're looking at bonds, and I want to start talking a little bit about what makes something actionable for you. You know, we talked about just now people forcing trades, right?
Yeah.
For me, the market has to be giving me such a compelling reason, and usually that includes more than one reason, a confluence of reasons, like a great attorney going into court with a lot of evidence instead of just one piece of evidence like a moving average.
Right.
That if I didn't take the trade and saw it work, it would be more painful to me than taking the trade and getting stopped out.
That's a good way to think about it. The way I think about it is any trade that I'm thinking about doing, I ask the question, do I want to lose money on this trade? How will I feel if I lose money on this trade? And the answer has to be, I feel that it was a good setup. It just didn't work out. If I look at something, and this of course means that there are good setups that I end up passing on that end up working out, and I also can't be frustrated about that. That's another psychological thing. When you see a trade where you did the analysis and you passed on the trade and it worked, that can be very destabilizing. But I just have to, and for me, it's actually quite simple. I think one of the things about my work is that I have obsessively drilled down to quantify the places where I can find a trading edge. And so what this means is that a lot of things that people talk about, you won't find in my work at all. I have not used a Fibonacci ratio in well over 12 years. Not a single ratio on a chart. And I know that's almost universal. And I know every time I write or talk about Fibonacci, I get a lot of hate mail from people. But for me, there are 2 points. One is that I could not verify the edge, and every test I've done of Fibonacci, I haven't been able to find that it's any different than a coin flip. And then the second thing is that I don't need it. For me, navigating markets with very simple patterns that are based on everything to me is a variation of the pullback concept. The market makes a strong move, and then what happens after that move? We're looking at bonds here. It's a little bit hard to see on the daily.
Let's talk
punch up
about
to the weekly.
maybe a couple of things that what you're thinking and what people are reading. You're looking at bonds. It looked like you had a candle that might be a continuation candle after a flag. Are you negative bonds here now?
Yeah, we're looking at shorting bonds, and the idea, the trade is really driven by what you see here on the weekly chart, and it's this. Does my cursor show? I don't think I can draw on the screen.
Yeah.
Okay, so this thrust down, which we might also see quite clearly on the monthly chart, but this thrust down generates enough momentum that then we watch for the character of the bounce. And if we get a kind of reluctant bounce, then, and there, I'm using subjective terms, but it's quantified, then we look to short new downside momentum. And one of the things that I'm doing here is measuring each bar as a standard deviation of the previous 20 trading bars. So we're looking for, and you can see over the past couple years, on this weekly chart at least, the preponderance of momentum in bonds has been to the downside. Yeah. And we would have had, if you're looking at other setups, you would have had the same thing back at 2017 beginning, and this would have been at best, a break-even trade. You probably on the weekly chart there would not have been a profitable entry, but you can trade within the daily on that. So I think short bonds is one of the ideas that's very attractive right now. Knowing what to stay away from is important, and I think precious metals right now to me are very neutral. And maybe it's a strange thing to say, but one of the other things that yes. Yeah, very, very much like the euro, and like the dollar. I think I'm not crazy about the dollar index futures.
How about crude, Adam? Because we're starting to run short. That was the first chart that you showed. It looked like we made a breakout. Some of my favorite trades are people thinking you have a breakout over a double top and then closing back underneath it is the failed breakout. What are you seeing here?
Yeah, there's a little bit of longer term history. We've been bearish for years on crude oil and been right. And then in the middle of last year, so in this area, started to see some pretty bullish signs. And so we've had a couple flip-flops so far this year. I've had a short setup through here, and this led to a small winning or break-even trade. But now this is one of the best trade setups I've seen in a while. And so what we're looking at here is, as you said, the combination of the breakout above this level, the flag setting it up, and there's a lot of ways you start to see a lot of overlap. This is a cup and handle type of formation. This is.
It looks like if the breakout holds, we could see $75. Is that what
I'm always a little bit hesitant to project price targets, but
okay.
I think we could see an uptrend that continues for months and months and months, and 75 or higher would be well within striking distance.
I really appreciate you taking time today, Adam. You want to show your website one more time and tell the people that are here the best way to reach you?
Yeah.
And
go to marketlifetrading.com. I have a massive free trading course, and it truly is free. It's 24 hours of video, ton of PDF exercises. I also have a couple paid services that are aimed at both stock traders and currency traders. I'd love to have you check those out. But the website and the course is free as much as anything. I'd love to have people check that out. You also can find my blog, which is adamhgrimes.com, and there's literally hundreds of thousands of words that I've written over the years, and you can see right here on your screen combination of quantitative and more subjective, more performance-oriented things. And you also can get in touch with me through the blog. You also can follow me on Twitter at AdamHGrimes, and I do my best to be accessible to people. So if you message me and I don't answer, I apologize for missing your message, but hit me again in a couple days. And Dale, I really appreciate the opportunity to interact with people here and to do this interview. So thank you.
You're very welcome. Thank you for edifying faith today, Adam.
Thank you.
You're now my trading warrior brother. I hope that every written word and every spoken word that you share with your mentees helps pips and dollars rain down on them. Thank you for bringing a realistic viewpoint to the business of trading, that it's not all blue sky, that it really the secret to trading I get from you is hard work and perseverance.
You got it. Absolutely.
All right, my friend. Thank you. That's Adam Grimes, everybody. I encourage you to follow him. Thank you, Adam. We'll have the video out in a couple of hours. Good hunting, buddy. Nice to meet you.
Same to you. Good day.
Okay. That's it. See everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings, and I'll see you tomorrow.